Another positive for the markets in 2014, the world is getting back to normal. So says Patricia Edwards. She's Managing Director of Investments at U.S. Bank Wealth Management. Patty, we have not heard the word normal in a long time. It's been anything but that. Tell us what you mean by this.
Well, I think if you look at what's been happening over the past 5 years, there's been a heck of a lot of intervention on the parts of governments. We've had overhang from things like the healthcare initiative. And so it really hasn't been a market that's been based necessarily on the fundamentals of the underlying companies. It's been more of a market that's been based on the global macro outlook. And that we think is going to be changing as we go into 2014.
All right, so how should investors look at this new normal world that you're talking about? What should they be doing differently, and what should they be doing the same?
Well, we're looking at the market for next year, and we're thinking that it's going to be a little bit like a B student in an overachieving family. It's going to be a perfectly nice return in the United States, but it's not going to be anything to write home about. 2013 is probably going to have been better. So what we're doing is we are making some tilts within our asset allocation. We're doing some things like overemphasizing international equities and emerging markets equities over U.S. equities, but beyond that, also emphasizing equities in general over fixed income, because fixed income has had a 30-year bull market.
All right, we've been hearing this a lot from many strategists saying time to look outside the United States. As you look at international, as you said, emerging markets, how should investors get into these areas? Is this they go into ETFs? Should they go into mutual funds?
Well, it's one of those things where it's very, very difficult to go in and buy individual stocks. So what I think you want to be looking toward, especially in the emerging markets, is someone who has got their hand on the market and is looking over it for you. Certainly, you can use exchange-traded funds, which are usually based on an index, but in a market like this, I think that one of the things that you really want to consider is having a professional manager who can overemphasize Asia if they think that Asia is going to be better than Latin America, or if they think that Turkey is going to be the next hottest market, that they can make those adjustments for you.
And, you know, some of the themes that we've seen over this past year that were so successful were big blue chips, you know, large cap stocks, many of them multinationals that did have a little bit of international exposure. What are going to be the themes for 2014?
Well, I think that you need to be looking at companies that have got that multinational exposure, because that's where the greater growth is. U.S. is growing at about 3%. We think emerging markets, China, are going to be growing greater than that. And so you want to have exposure to those emerging markets. You also want to be looking at companies that do well in an environment where you're in low growth and low inflation. Companies that have good, strong, fortress-like balance sheets with lots of cash on them, that cash can be used not only for growth, but also for dividends and for stock buybacks.
You mentioned that you're overweight stocks and underweight fixed income. Some people still like to have some bonds in their portfolio. What are you recommending?
Absolutely. For most of our investors, we are always going to have some sort of piece of fixed income in the portfolios, but we would be looking toward taking a little bit more credit risk and being neutral in terms of the duration on the portfolio, really kind of having a moderate length of time that the bonds mature in.
All right, Patty, thank you so much. Happy New Year. Hope to see you in the new year.
Happy New Year.
Patricia Edwards from U.S. Bank Wealth Management.